Good morning, good afternoon. Welcome to Poland Weekly program about business. Today, very up-to-date topic, ESG. I think we talk all around about ESG, but today we'll talk about ESG and its impact on the M&A market. It seems to be quite big. And of course, wherever you have money and investors, the ESG and, to be compliant with the new ESG criteria is probably critical for both sides. Today, my guest is Dr. Fabian Elzanowski, an attorney with over 12 years of experience in M&A and corporate law. He has advised numerous domestic and international clients on transactions in energy, transportation, chemicals, infrastructure, IT, and e-commerce markets. Founding partner at Elzanowski Partners, where he leads M&A, corporate, and ESG practices. Good morning.
Good morning. Thank you for having me. Indeed, the topic is very exciting, it's very complex, and I'm very happy to share some comments with you.
And I understand it's a mix of actually, impact of regulations on the business side.
Yeah.
So I think that maybe let's start with this. In general, we hear that companies are recognizing the importance of ESG. And in general, probably, of course, you have people who see the glass half full and those who see the glass half empty. But of course, the pressure that comes from the regulations is quite big. Usually it's, sometimes we talk that it's investors, sometimes we talk that it's consumers. So I'm wondering which factors are making and shaping an M&A market, whether it's more like impact from the investor side, whether it's consumers, whether it's companies. Who is actually the driver of the change and the impact?
Well, first of all, I think that ESG factors are undertaking notable surge in recognition. And while historically ESG considerations, such as environmental considerations, social considerations, were mostly associated with CSR, and CSR was mostly associated with PR. I think nowadays the ESG considerations are increasingly shaping business, and that includes shaping investment decisions in M&A, access to capital, and how deals sometimes are executed. And I think you are right that the pressure comes from the investors and consumers, or maybe some would say that it comes from society as a whole, that in response to climate change, environmental pollution, or some malpractices in terms of human rights or social standards, they demand a robust response from the governments and regulators. And so EU with European Commission, it actually took a very ambitious stance on this, and it proposed numerous policies and regulations that have this very ambitious goal and that want to engage business into achieving that goal. And so if you think about like ESG regulation, then it's really all about making business co-responsible for meeting those ambitious goals. Let's take European Green Deal. The goal is for the EU to become climate neutral by 2050. Therefore, it's a very ambitious goal. And so it's no surprise that the number of regulations are so big and they are so comprehensive. Just to name corporate sustainability due diligence directive, corporate sustainability reporting directive, sustainable finance disclosure regulation, EU taxonomy regulation, EU green claims regulation, and directive on improving gender equality on corporate boards, and so on and so on. So there is really a lot of them. They kind of impact business operations from various different angles, and they were designed to respond to those very, very ambitious policies. And so I think that investors engaging in M&A activities, now they they are aware that incorporating those ESG considerations is not merely a trend. It's sometimes in some industries, it's more of a strategic imperative. Mm-hmm. Yeah, any M&A is always like forward-looking. Yeah, we buy business to profit on this, but from its future operations. When the company is valued, then it's valued based on its projections on future earnings or future cash flows. So now, given the changing landscape and new ESG risks, the acquirers will need to ask themselves a question: how those earnings might be affected by ESG risks. And so this is really now all about like reimagining your risk assessment in a deal-making process.
Mm-hmm. You mentioned that you think that actually the awareness among investors is quite big, but in general, I was actually quite sure that in business terms, people are aware of, what is ESG, but sometimes I'm quite surprised that there are actually quite a lot of myths or, misunderstandings. One of them, for example, is that we are not talking anymore about non-financial reporting, because actually ESG, it was meant that ESG and things that are related to the ESG criteria have an impact on the financial side. Yes, so for example, we are talking about sustainable reporting. Yes, at the end of the day, it's also that once I've heard on the conference, somebody said, yeah, but I don't think that it will be such impactful because it won't be signed by the boards and the supervisory boards. So they meant that it was like CSR, like you mentioned, more like a PR than actually a real strategic tool for development of the business. That's also not true, because as far as we know, the sustainable reporting will have exactly the same, will be the same document as equal as financial documents that have to be signed by the boards and supervisory board. So I'm wondering whether you see that business are aware that it's really real, having impact, and it's not something like with the CSR, something nice to have, something that might, on the very surface help your business to be maybe more attractive, but it's actually a deep change, very strategic, from strategy through implementation to KPIs.
Yes, I think that you are absolutely correct. That awareness of ESG regulation varies across different regions, industries, or even firm by firm and manager by manager. But there is definitely like an upward trend in understanding. And I think that it will impact every stage of M&A process and will impact companies' operations from various different angles. But there are some misconceptions and myths about that, that's for sure. I think that one myth, for instance, is that will not affect small and medium companies, that it will affect only large companies. And that is a misconception, and I will explain an example. Let's take CSRD or CSDDD. Both these regulations, among other things, they address the quality of supply chains. Yeah? CSRD, it's more about reporting, and the CSDDD is more about having a robust compliance in place to review your supply chain, and to, if there are any, if there's anything to improve, then to apply some remedies. But in order to review your supply chain, you will need to request information from your suppliers, and including small and medium companies. And for those companies, and this is already happening, and for those companies to answer those questions, they will need to do their own ESG consideration. They will need to assess their own ESG performance, and they will be assessed on those bases. And that's the first thing. I think another misconception is that ESG might be kind of a superficial exercise, that it might be only about ticking boxes on a checklist. And in many cases, it might be the case. However, I think the companies that will look at this through those narrow compliance lenses, they might miss out on many opportunities, like for value creation or building competitive advantage. Let's take this example that I just mentioned. A supplier will need to report, for instance, on its carbon footprint. If we have two competing suppliers in a similar business, and one have a smart long-term policy in terms of how he purchases electrical energy, and the other one does not have, so the first one will actually have a competitive advantage if they are both assessed in terms of their impact on the whole supply chain of a large client. So definitely, I believe that there are many misconceptions, but still we are kind of at the beginning of this ESG change, and I think this understanding will grow in time.
You mentioned that actually, M&A is a complex process, and actually the ESG criteria will have an impact on the whole process. So maybe let's go through this process to be more precise on what exactly do you mean by that. And let's start with, the first step, like the beauty contest. Every company has to present itself to be attractive, to get attention of the potential investors, yes? So I believe that's the first step where we can see this impact, whether this company is compliant with ESG reality.
Yes, so I think that's, as awareness is different across different industry and region, similarly, the impact of ESG consideration on assessment of business and its attractiveness will also differ on across different industries and different buyers. Yeah? And if we think like that there are, for instance, there are like high impact industries that actually pose a high risk for ESG. Those are industries such as manufacturing of clothing, manufacture of textiles, forestry, agriculture, extraction of minerals, wholesale trade in minerals, and so on and so forth. So if you think like, if we take the most extreme example, the mining industry, then there is research showing that the value of fossil fuel assets is depreciating over time. And this has to do with ESG and how it affects its attractiveness. But also in less extreme examples like manufacturers of clothing, then in those cases, if we look at the attractiveness of such business, then the ESG considerations permeate like every stage of M&A process, including how such business is attractive. So if you have in this field two businesses, but one with a strong ESG record, another with like a poor ESG performance, then the first one will for sure be bought at a premium. And even if we go beyond those high impact sectors, then I also see that some transactions are kind of ESG motivated. So we see that those deals are done solely to pursue a buyer's sustainable agenda. For instance, if the buyer is exposed to carbon-intensive business, then he might want to reposition his portfolio towards more sustainable energy. In other cases, the buyer might be kind of ESG conscious, so take some ESG considerations into account when he assess attractiveness of a business. So he might check whether the target's carbon footprint aligns with its sustainability goals. And in other cases, still many cases, ESG factors that not play important role in assessment. So I think that it really varies across different industries and buyers, but the trend, and because we are at the very beginning of this ESG change, I think that the trend will be that those considerations will play more and bigger role in the future in terms of how we perceive a target and how attractive is the target and at what price will this target be bought.
Yeah, of course, I can understand that also in terms of attractiveness is that we live in the competitive world, yes? And normally you have several businesses that are approaching, the investor, yes? So the better you are prepared to face what's required, less effort for the investor to adjust. Or then he can, as you said, it's a little bit with the valuation, yes? So then you can get a premium price versus maybe the business that it's in the same sector, but the effort and the money that will have to be put into the transformation of this business to be compliant with the new criteria, it's also the cost for the investor. So then maybe he will be still interested in buying into the business, but of course, on the different valuations, right? So that's
true.
that's interesting. And here we smoothly come to the topic, which is, I think, key motivation, maybe even when we take a look at the ESG's financing sector as a whole, financing, insurance. I think both of these areas are very important side of the M&A market. So, what's the aspect? What's the impact of this ESG criteria on the financing of the businesses? How do you see it playing out?
Well, I think that ESG has an impact. I think that companies with a strong ESG performance has better access to capital in general. The banks already take this into account when they assess long-term risks connected with a company, and this is all incentivized by regulatory changes. So today, banks have to, for instance, show their green asset ratio. Yes, it's a percentage of their EU taxonomy aligned assets as a percentage of the total covered assets by the bank. And so then those banks are compared based on this green asset ratio. Then we have initiatives from European Central Bank and European Banking Authority that will further incentivize greening the balance sheets of the banks, or to some extent it will require this greening of their balance sheets. So I know that the capital requirements of the banks are now undergoing review, and they might be changed also to include those ESG risks. Yes, so I think the trend is clear that it will get more and more difficult to finance acquisitions of companies with a poor ESG performance.
Mm-hmm. I think that's another factor, because often when I talk about ESG, I have this feeling that people would prefer things to stay as they are. But I think that we have so many different angles, whether it's regulations, whether you will be obliged or you will be pushed by your business partners. Yes, then financing is the other area. I think that another tool which makes it almost impossible in the future to do the business like you used to do, right? So I think that's another thing. But something when we also discuss the ESG risks, we talk about due diligence process, right? And it also has an impact. So if you could also explain to us what exactly can both sides expect in M&A processes.
Yeah, ESG considerations may have very important impact on due diligence process, but of course it depends on how ESG sensitive is the acquirer, or what are the underlying factors that are driving these transactions. Yeah, in this ESG motivated transaction, this will be much greater than in case of transactions where the acquirers do not take this consideration into account yet. And so, but first of all, if we think of legal due diligence, now we face this huge change in regulation in the regulatory landscape. And so that, of course, affects legal due diligence. I think we can expect more emphasis on environmental law review or on employment issues. Yeah? So that's for sure. Also in terms of other issues like anti-bribery laws and so on. But apart from legal due diligence, I think that it will definitely also affect financial due diligence, commercial due diligence, or operational due diligence. Let's take a financial one. Yes, one of the underlying principles of ESG regulation that's embedded both in CSRD and CSDDD is this double materiality principle, which basically says that we have to look how the company is affecting people and the planet, but also how the environment is affecting companies' financial operation. So if we look at companies, let's say, earnings, then we come back to this question I posed at the beginning: how will be those earnings affected by ESG considerations, whether the company can actually maintain earnings at this level, or whether due to ESG considerations they will go down and they cannot be recurring over and over. And so I think this is like important question. In terms of like operation or commercial, then the company, if the acquirer is like ESG conscious, then he can review whether the company's carbon footprint align with his sustainability goals. If the target company is heavily reliant on public tenders, then now more and more public tenders have those ESG criteria in place, and that trend will continue. Yes, so at some point, a company with a poor ESG performance may be cut off from those public tenders. Similarly, if a company is heavy reliant on, it's a heavy industry, it's heavy reliant on water consumption. Now, this does not come from like regulatory pressure, but those are ESG factors, environmental climate factors. We know that there are big shortages of water also in Poland, and the business is heavy industry is always reliant on a big consumption of water. So how this might affect the future of the company, yes? So this is all like due diligence aspect, and that I think will be taken account, and to some extent they are taken account already, but it depends, really it's case by case right now.
I have a reflection when you said this, that actually, at the end of the day, it's a little bit also good for the business to make this exercise, whether it's a must or not, because the truth is that what happened over the last 5 years in terms of the different type of shocks and everything makes it that actually business is not performing as it used to be, and probably it won't get back to the stage. Yeah? So I think also, once somebody told me that even when you have this M&A transactions, it's not only about the flow of the capital, but it's also a flow of the know-how, yes? It's about being sure that the company you are acquiring is really well prepared to manage in the times where a lot of unexpected can happen. Mm-hmm. So this ESG, which comes from strategy, that you always have to have a strategy, then you have to go through the implementation, you have to ask a lot of questions. Why? What risks, what opportunities each of the factors can have of my business in this new reality. Yes, yeah. I think it's just actually very practical at the end of the day, if you really want to plan your business long term. And usually if you are ready to go on the M&A market, yes, you have to think long term.
Yeah, definitely. You are always entering into transaction under certain assumptions. And those assumptions are changing now, and assumptions about certain risks are changing, and about the sustainability of a business model is changing. So you are completely right. This is undergoing a change, and this needs to be taken account in this whole, let's say, assessment process, and then in due diligence process when you verify those assumptions.
Yeah, so even though if it's an effort, because probably in terms of the processes in the company, it is an effort to go through these steps, I think it's worth doing it, even though you are maybe not those companies that are in the first place obliged to report. And now we come to the last part, which is also very important, I guess, for the M&A process, which is post-merger integration. I think a lot of companies, are getting to the point when the deal is done, and then actually the whole job starts, right? And what's your takeaway on that?
Yeah, sure. For me, post-merger integration is somewhat like a continuation of due diligence to some extent. Because if we have a due diligence and then we have a findings, and let's say that those findings are related to ESG matters, then it's a question how we will address those issues, yes? And some of those, if there are, let's say, legal risks, sometimes you can simply address this in transactional documentation. But in other cases, if it's more about how the company is like approaching certain things in the long term, or how the company could change its policy in order to become more, to improve its ESG performance, then this is something for ESG, for post-merger integration, yes? To apply those findings in practice, and to make company more resilient in the face of those ESG risks. I think another issue is that especially when it comes to large companies, they already have, or they will have, ESG compliance system in place. Yeah, and so post-merger integration will be also about like merging this target into this compliance system of a mother company to make it more efficient. And so I think there are like many little details here and there that will come into play when it comes to how ESG affects the post-merger integration.
Mm-hmm. Well, okay, so maybe just a little bit to summarize, I think maybe in general, what type of change do you expect? How do you expect the M&A market to change? Whether it's ESG, whether this, it's a fast change, it's a middle-term process, long-term process, because I think that maybe I'm always optimistic, but still I think that we are a little bit in the waking up mode.
Yeah, for sure.
So the question is how quickly those new regulations can have an impact on the M&A market. And also, on some extent, I understand that in Poland there are some sectors that are very much under pressure of M&As, and that's natural way of, developing of the market. So it also has a big effect on some certain sectors in Poland and elsewhere.
Yes, I'm sure. And you're right, that is a trend, and we are kind of at the beginning of this. But when we look at this from this, let's say, a standpoint of where does it come from? So from those policies we talked about, then this trend is inevitable. Yes, because if I think that you want to become climate neutral by 2015, I don't think this goal will change anytime soon. Or I don't think that will change our environmental standards. Or I don't think that societies will, let's say, accept some infringement to human rights when the business is done abroad in the countries where this human rights record is not that perfect.
Probably opposite, because if we look at the younger generation, we can see that actually the expectation that the business will lead the social change and will be responsible is even growing.
So exactly. So it's really about how this train will progress, and we can, there are always discussions about the details. The CSDDD has been like undergoing many changes in the process now, in the legislative process. And so we see that business representatives and other stakeholders want to have a say on how those regulations are drafted. But the trend is clear, yes. So it's only a matter when some regulation will take effect and when it will be reviewed. And so we cannot kind of stop this trend. So I believe that M&A market is changing and it will change under growing significance of ESG requirements. I definitely anticipate like a shift toward more sustainable investment, given the growing awareness of ESG risks and ESG opportunities. And I also think that the companies that will, let's say, proactively embrace this ESG change stand to benefit.
So now we need the leaders of the change and those who present the best practices to the market, and the rest will follow and will have to adjust.
Yeah, that's true.
Which at the end of the day is good for all of us.
I agree.
Thank you very much for the discussion.
Thank you very much. Thank you for having me.